Hi, this is Randy Finney with the Right Side of the Chart, and today is Wednesday, February 3rd, 2016. This video is actually the second video I've done tonight, so there's good news, bad news. The good news is for you. First video, I talked ad nauseum about all the different support resistance levels, everything that I'm seeing in GDX, gold, the dollar, the euro, the yen. And that video went almost 28 minutes long, which is a lot longer than I want to get these videos. So especially for a short-term video. So let me just sum up my thoughts right here. Today's price action in gold, the dollar, the miners can be construed as nothing but bullish. I posted my thoughts in the trading room when I had problems getting that other video uploaded, and that's why I'm doing this second video. The uploads kept failing. But in a nutshell, what I'm looking at here, my assessment on the miners, as well as gold and the currencies, especially the miners and gold, is that we had an overshoot, a momentum-fueled overshoot is what I like to refer to it, of overshoot of resistance. So we had, I've modified these lines slightly, but let's just focus on the line that we're at right now. We closed today right at this resistance level here, this blue line. It's not the best defined resistance level, but there are certainly reactions. I wouldn't put a line there. I don't make up, try to add support or resistance levels just to support my case. I see reactions here. I see reactions here. I see a reaction high there, a big gap. Now that gap was very technically significant. We gapped down late in mid-2015 last year. Tried to get above it. You can see here there were just 2 days where GDX attempted to trade above it. Actually a day, and the second day we closed right back down on that line and failed. So there were a couple weeks, we got above it, failed again, couldn't hold it. I do construe this as it looks like basing action. It looks like GDX is trying to pound out a base here, and however, it still has work to be done. We haven't cleared that base. We haven't cleared these reaction highs. And most importantly is this white downtrend line off the September 2012 highs. Take a look at that. I've talked on this a lot in the past, so I won't go into detail my longer term outlook. I can tell you this is the downtrend line. I will begin to let my guard down and say that the bear market is most likely over in the miners in gold if and when this downtrend is clearly taken out, and that is not the case. In fact, that should come in as pretty significant resistance, and you can see we're just a day or two, on a strong day below that. So here, that's the story. We have this tremendous, very powerful move up off those lows, that fake out move below 13 that I talked about recently. That was a key support level, and as I said at the time, even before it happened, if that did happen and we got back up there, that would be a very bullish technical event, which it was. So, I didn't catch the move back up in time to post on the site, but although I was posted personally being long the miners, took them out, tried to game that pullback, and my mistake, really not paying attention to everything that I had covered on Friday. If you haven't taken a look at Friday's video labeled Market Overview for January 29th, 2016, in that video, right after the beginning part where I talk a little bit about the equity markets, I spent the bulk of that video talking about everything that I'll cover here today, all of which played out. And what that is a breakdown in the dollar, a breakout in the euro, a breakout in gold, and GDX took out the stop level. But again, now we have GDX closing at resistance, not a solid resistance, not, on a scale 1 to 10. This certainly wouldn't be a 10. This would be up there, this trend line. Nonetheless, it's resistance while near term overbought. And I really chalk this up to being a momentum-fueled overshoot. As I talk about on the miners, they have such powerful momentum that they tend to overshoot support and resistance levels when they have these sharp moves down. So let's just see what happens tomorrow. I'm leaning towards a pullback, and I'm only looking for a shallow pullback. I'm open to any possibilities, even a continued move higher. But I can tell you this, I severely doubt that we can continue on up and go right through this trend line like it wasn't there. So, should we power up tomorrow in the next couple days, hit this trend line, even take it out in a day or two, my strong inclination would be at the very best, GDX would have to come back test that trend line if it keeps powering up, because it'll be the miners will be so overstretched in the short term. And again, now that's a simplistic view. I take into my analysis what gold is doing, what silver is doing, the US dollar, because the dollar obviously affects gold. Low dollar boosts gold, rising dollar hurts gold. And that just want to share my thoughts there. Long term, nothing has changed. I've mentioned this for a long time. Bullish divergences in place. Looks like basing pattern here in GDX. So, again, the potential is there, as it has been on the last few lows. I'll admit that the potential has been there for the miners to bottom. We just have to now take out those support levels, and this will be a monstrous level here at $17 level. You can see the reaction high, reaction lows, and the lows back in 2008. We're a little ways there, still to go, a little work to be done. But longer term, I think the case can be made. There's gold. This is a 10-year weekly chart. We were just looking at a weekly chart on GDX. Have this major support zone just below us. In fact, there's support starting to come in now around these levels, right around where gold recently tagged the 101 level, or at least GLD, the ETF. So that support zone, really, to be accurate, should run up to, from where gold hit down to here. We have some fib clusters, bullish divergences. So again, everything is there. But for gold, to safely say that gold has embarked on a new bull market, I should say. Let's at least see this downtrend line right here get taken out. All right, so enough of that. Let's fast forward and look at the currencies, UUP. And this is where I'm really kicking myself in the ass, because on Friday I had, did an extensive overview in that video of the currencies. The dollar had one of its biggest moves in a while on the BOJ move to a negative interest rate. So Bank of Japan took rates negative. That really had a huge effect on the dollar, with the yen sinking against the dollar. So there's that big move on Friday. And I had stated we were still within this rising wedge pattern on UUP, bearish rising wedge pattern. And I stated my expectation was for a breakdown. And of course, with you're looking at where prices are in that pattern, that breakdown was, if it was going to occur, which it did, it would be any time, and that's exactly what happened. So we had a breakdown. It appears as a gap here because UUP, of course, is an ETF. And ETFs only trade between 9:30 to 4, at least what you're seeing on this chart, whereas the currencies trade around the clock. But either way, that should have been sell signal number one for the dust short. It was a bullish event when the dollar broke down, and that's exactly, as I said, what I was expecting on Friday. The euro, of course, the euro is the largest weighting in the dollar index. And this is the euro against the US dollar, so the euro-dollar pair. I had pointed out this symmetrical triangle pattern, expecting an upside break. I had mentioned this target at the time, 111.87, somewhere in that area. And I added this target just recently tonight. I see quite a bit of resistance here. This is support back at this point in time. There's numerous reactions, and you can see where the euro-dollar pair closed on there. Happened to pierce through there intraday, but closed back down. And this is a currency chart, so this should be live, a currency pair, so this should be trading as I do the video here tonight. And we still haven't managed to punch through there. So bullish breakout, yes, absolutely. Little too much. That's a huge move in the euro dollar pair in one day. So I think that might be, again, all I'm looking for here is a little pullback, maybe a 50% retracement of today's move, possibly a back test of this wedge. It's hard to say at this point in time. When things open for trading tomorrow, we'll have a better idea. So again, I'm just making the case for a near-term pullback in the miners, possibly. But I'll let you guys make your decision on that. And just looking at the daily chart of gold, here was that breakout in gold today, right there. The same trend line that I mentioned on Friday, expecting the, break out of that to happen soon. I just didn't think it would happen right away. So what I did, I extended this trend line. This was, if you recall, if you kind of wipe that out, if you were trading gold for a while, most of you remember back in 2014, 2015, we had this triple bottom here. And that was a huge, huge level there. And finally, when gold broke down, that was it. It just had a huge gap, big meltdown, tried to regain that level, a few attempts, and just couldn't hold it. And so all I've done now is extend that trend line, and that happens to come in that more of a horizontal line, defining that triple bottom low. Actually, didn't have it. There it is. Now it's centered here. Whether that comes into play or not, I don't know. This is stretching it a little bit only because we've now sliced through it a lot. What happens when I have a support or resistance level, the more that level is sliced through, the less validity I give that level. However, being that it was such a key, well-watched level back then, I figured it was worth mentioning now. Call it a case of confirmation bias if you want. Again, I don't think that's it. I'm looking at this and I believe that the breakout is valid. I just think it's a little much considering how stretched gold was to get there. Had gold moved up and consolidated it, had this strong run up, pulled back, consolidated for a few weeks under here, pulled back maybe a little bit more, but at least reset those near-term overbought conditions, then punched out through there, I would be much more on board, I should say, with this breakout, but that's not the case. So, okay, and to wrap things up, let's just, as I like to do, I like to take a look at some of the top holdings in a sector, especially sectors that are overweighted, such as the QQQs. There are some very balanced indexes. In that case, it doesn't matter if every component has a roughly equal weighting, but in this case, these are the top three components. Just pull the post up. It was on Monday. You can use the ticker by symbol box on the front page. ABX, NEM, and GG. ABX is Barrick Gold, one of the top three. And at the time on Monday, I'd pointed out that we had this very well-defined, let's just say a very well-defined resistance level, and I expected a pullback. And there's Monday's candlestick. We zoom in. So I was right on the pullback. However, that pullback took us in GDX down to that first price target that I had, or I'm trying to recall. That first price target was already hit. I can't remember if it was hit back here or Monday, but either way, I got the pullback, but it was very shallow, and ABX just kept punching on through. Now I added this trend line here. Horizontal resistance level at 1087. And, it's not random. Again, I won't put a random trend line in. I see a reaction high there. I see a reaction low, reactions here, and reaction back here. So not the best defined resistance level. There's another resistance level overhead. But again, I know these, I'm viewing, the miners were sucked up in sympathy with gold today. And again, I think that might be a little much in the near term, and these just may need a little breather to come back in, but longer term, intermediate term, I see no reason why not to remain bullish on these stocks. So this is Newmont, NEM. These are this line here. I'll color it. This is the one I pointed out on Monday's post. That was a static post, so you can pull those charts up. Expecting a reaction on the initial tag of this trend line, which is exactly what happened. There's a reaction. It might not look like much, but that was better than I didn't hit the top of it, but I'd have to move that line. That's about a 5% pullback from where we hit the trend line, a good 5% to where we pulled back. But that's all it took. And then Newmont had a huge day. Now, remember, this is one of the largest gold mining stocks in the world, and it had 11% gain following a run of, what is that, 27% in, let's see, this will tell me here, 11 days. So 11 calendar days. 11 sessions, 7 trading sessions, 11 days. That stock went up almost 29%, and then it added on, had 11% move today. That is what I call extremely overbought. And, as I said, on mining stocks, overbought can become more overbought. Here's a couple cases. You can look at the RSI. Sometimes that RSI hits 70 and the stock pulls back. Sometimes it takes another tag. But remember, we had a couple near overbought readings recently, and again, all I'm looking for is a pullback to draw it out here. Ideally, would be a pullback to this level. It may or may not give us that, and then a continued move higher. Maybe some consolidation. That's really what I'd see. I don't think it would be a one and done. I think it would be a little zigzagging here and then move back up. So, and just again making the case for a possible near-term pullback tomorrow. And if it doesn't happen, then I've just wasted about a couple hours of my time tonight doing this video, and I'll move on and look for the next objective entry in the stocks. This was GG, also covered on Monday. In static post, one of the top 3 holdings, very nicely defined, well-defined downtrend line. This was a bull trap or a fake out, although prices acted well. If you look at the breakout that happened there, prices came back, backtested, finally couldn't hold that trend line, came back in. Lots of reactions, but I really should highlight this here. I'll color that red and show this. This is a pretty formidable resistance zone because we have these most recent reaction highs right here and here, as well as some other reactions along the way. So yes, we have a breakout, but when trading, if I'm trading a bearish falling wedge pattern, this is a bearish falling wedge pattern right here, large on the on the daily time frame, and I see a formidable resistance level right overhead, I will not take that breakout. Not that I have a position in GG, but I would wait until that level is taken out. So if I had to venture my best guess on GG, even if there is some more upside tomorrow, we get a pop, maybe a gap up in the morning, and an immediate reversal down. And I'd look for at least a back test of this trend line in GG before prices continue higher up to the next target. So, all right. This has been Randy Finney with Right Side of the Chart. I think I covered everything I wanted to. If not, I'll add some comments in the morning. Hope you enjoyed it.